Hello, I am Kiara, a certified accountant. Today I'm going to be teaching you all about petty cash. A petty cash fund is an amount of cash kept on hand to pay for minor expenditures, whereby the amount in the fund varies from company to company. It is a method of internal control over cash, which assures management's instructions are carried out and the accounting records reflect all transactions. Its operation includes establishing the fund, making payments from the fund, and replenishing the fund. How is a petty cash fund established, you may ask? Well, firstly, it is done by writing a check for the amount in the fund, cashing the check, and placing the cash under the care of an employee, whom is a designated custodian. Suppose on the 4th of October my firm cashes a $200 check to establish a petty cash fund. The cash is given to the custodian, my colleague Frank. A journal entry must be made to record the fund's establishment. We would record the entry as the following. Petty cash is debited as it is an increase in assets, and cash is credited as it is a decrease in assets. This is what it means in the context of the accounting equation, which therefore shows there is no change in assets and the equation balances. After the fund is established, the cash can now be used to pay for expenditures, which can range from miscellaneous office supplies to the staff coffee run. Payments can be made in two ways. Either cash is taken from the fund, or employees are reimbursed from the fund for payments personally made. Either way, for the use of any cash, the custodian should collect both receipts and authorizations. Be careful, payments made from the petty cash fund are not journalized. Journal entries are recorded only when the fund is replenished. Now the third operation is replenishing the fund. To do so, the fund is calculated to determine the amount spent. If our fund started off with $200 and has $144 remaining, $56 is to be requested to replenish the funds. When a petty cash fund is replenished, the amount of cash needed for replenishment should equal the total amount of receipts. But the world of accounting is not perfect, and this will not always be the case. Custodians may misplace receipts, or the amount simply might not add up. If the amount of cash spent does not reconcile with that on the receipts, we name this difference cash over and short. Let's say it was recorded that $42 was spent on supplies and $14 was spent on postage, but the petty cash fund only has $100 left in it. This $44 difference will be made up for by the cash over and short account. Today, employees simply seek electronic reimbursement, defeating the original physical use of a petty cash fund. Electronic records are handy and much more precise in some circumstances. Either way, the recording of petty cash funds is important, as cash, especially petty cash, is an extremely vulnerable asset of any entity and needs protecting. Moreover, that's petty cash funds. Happy learning, students!